Yeah, good morning, Chris. That was an absolutely fascinating presentation. So I think a lot of our viewers who are not able to actually attend the presentation would love to at least understand a lot more about the digital banks. Of course, we will recommend that they all read your book. But again, for those who haven't yet got around to that, I think one of the things which is most confusing for a lot of our audience is to actually understand what exactly is a digital bank. So, for example, it's like the poem about the six blind men who went to see the elephant, and they all came away with very different perceptions. So, some people see a digital bank as maybe a great internet banking interface. Some people see it as a great mobile app. Some people see it as one where there's branchless banking. So, how do you see the way the digital bank has really evolved over the years, say from what Prudential launched with right back in the late 90s, through to what, say, Goldman Sachs is doing with Marcus today, to what, say, Alipay is doing in China, and what may come up in India either through Paytm or somebody else as we go forward. So again, it's just what is this animal, the digital bank, and what should we really expect from it?
So there's a lot of phrases that are thrown around, digital bank, fintech, and techfin. They're all getting to the heart of the same matter, which is building financial services that has digital at its core. And what we mean by digital at its core is that it's made on the internet for the mobile network generation. And made on the internet is quite interesting because a lot of people, for example, use the acronym GAFA to talk about Google, Amazon, Facebook, Apple. I drop Apple. And the reason is that Apple was not made on the internet. Neither was Microsoft. Google, Amazon, Facebook are made on the internet. And they're network companies connecting and focused upon platforms and marketplaces. And so a digital bank and fintech companies and techfin companies start with the internet at their core for the mobile network generation and build from there. For a traditional bank, the challenge they have is that they were not made for that business model at all. They were built for the physical distribution of paper in a localized network of buildings and humans. And if you think about traditional banking with checkbooks and cash, it's all about the paper and the administration of transactions on physical ledgers that were then automated into mainframe ledgers. And now we're trying to move them into distributed ledgers. And the problem that you have is that if a traditional bank has a business model focused upon physical distribution of paper with buildings and humans, they don't have digital at their core and they will fail. And if they think it's putting in super apps or putting in better technology services and evolving what they've got, they're going to fail because it's not business as usual, cheaper and faster with technology. It's rethinking the business with technology to have digital at the core. And there's hardly any traditional banks that are doing this. I can name sort of a few, but apart from domestic players, if I'm looking at international players, there's less than 10 I can name. Because most are trying to do business as usual and not transforming their business for the digital age.
And one of the points which you made very eloquently in your presentation really was that banks are not going to disappear anytime soon because banks are really built on a foundation of trust, often built up over centuries. And again, so when we look at fintech players coming in and looking to try competing with these banks, how would they really try building up the same levels of trust, particularly in a world where we've seen some of the largest tech companies, in a sense, betraying that trust in recent years?
Well, the average technology company in America deals with about 27,000 regulations. The average bank in America deals with 128,000 regulations. So financial institutions have 5 times more regulation than the average technology company. And there's a reason for that, which is that it's one of the most sensitive industries and markets in terms of finance because it affects our lives so fundamentally. If you lose money, you can be destroyed. And so as a result, governments are very conscious of managing the financial markets and specifically countries depend on financial markets to be healthy, to have strong economies. And if the financial markets fail, you end up with a basket case economy and huge issues, which affects every single citizen, every single person in the country. So it's actually a fundamental part of our lives that needs that regulatory oversight. A lot of fintech companies started with naivety. They started with the idea that banks are really complicated and they're stupid and ignorant, they don't innovate, and so we can take technology and destroy them. And then they realize actually there's a reason why banks do the things that they do, and it's being built, as I said, as you repeated, over centuries. It's not something that's there for a stupid reason, it's there for a very good reason, which is going back to strong economies and consumer protection. So where we are now is most fintechs are trying to collaborate with banks because they've realized that banks exist for a very good reason. They have millions of customers, centuries of history, billions of capital. None of those things the fintech company has because they're starting up. So if they can collaborate with the bank, then it's a win-win for both.
So from an organizational design perspective, traditionally you've had a CEO of a bank has a head of wholesale banking, a head of retail banking, a head of treasury, a head of marketing. Now, how do you see some of these legacy banks bringing in digital talent, bringing in that digital mindset to enable them to compete with the younger fintech players? It, I think, as you mentioned, needs to be driven from the top by the leadership. But to what extent are they really able to send the message down the line to bring the people, the foot soldiers of the organization along? As you said, either you progress or you move on. So how do you actually instill that change in the organization?
Well, I mentioned in my presentation that I'm working on a new project, which is interviewing and researching the banks that I think are doing digital well, of which, as I say, there's very few that are international that I could point at. But JP Morgan Chase, BBVA, ING, DBS, China Merchants Bank, I've met with all of them, and these 5 specifically I'm focusing upon to find out what it is that they're doing and how are they changing. And I think there's 2 or 3 key learnings, and in the presentation I gave about 20 very quickly, but the headlines would be that the leadership team is reorganizing the company around digital at the core. In doing that, they see that technology is not separated from business. Technology is business. To achieve that, you no longer have the technology function separated from the business functions. So they have designers, developers, and coders working in the audit, treasury, and compliance, and wholesale, and retail, and marketing teams side by side with the business people. And those business people are learning new jobs as well, because a lot of the traditional skills need to be updated. So, for example, even if you're someone in trading and investing or in wholesale client contracts management or branch management, whatever role you have, the companies are saying, look, if you reskill, you remain relevant. So take 2 hours a day out of your day for 2 months and learn Python. And here's the support to do that within our innovation lab, or learn social media custom services, or learn skills that are relevant for the future rather than some of the skills you had in the past.
So do you see organizations doing that already, or is it at the moment?
Yeah, these are the lessons from the banks that I'm focusing upon. That they are actively motivating and supporting everyone to reskill. They're saying to all their people, we don't want to lose you unless you want to lose us. Because the journey to digital is not necessarily an easy one. It does mean that you've got to change your job, and that's uncomfortable for a lot of people. People don't want their cheese to move, so to speak, so they want to stay doing what they've always done. You can't have that in this new world. And what's interesting, in fact, in this new digital world is that most people will end up with maybe 5, 6, 10, or 20 different career moves in their life. You won't just have a job for life. That's gone.
And how do you see the regulatory environment around fintech evolving? Do you think regulators have really appreciated the potential for digital? Do they appreciate that the banks need to be nimble, the banks need to adapt? And are the regulators around the world actually supportive of that change? And if so, who would you rank as maybe the top 2 or 3 regulators who've really contributed the most to in enabling this change?
Well, it varies by every country, because regulators can typically, their view is they can only regulate what they can see. So it's normally regulating what's happened in the past rather than for the future.
But have they tended to be obstacles? Have regulators put obstacles sort of inhibiting innovation, inhibiting change?
Well, again, some have. So a lot of regulators don't like Bitcoin or cryptocurrencies or ICOs, initial coin offerings. They don't like the innovation of markets that haven't understood why banking exists the way it exists and has the structure that it has developed in the past. There's some, like UK regulator, and I'm not biased, but UK regulator has been very forward-looking in moving towards trying to stimulate innovation rather than to put barriers against innovation. And that's then been emulated and in many ways interpreted in different ways by Singapore and Hong Kong and United Arab Emirates. And so I'm seeing a number of markets moving forward very rapidly. I've just been, before I came here, in Honduras and in Australia. And so Central and South America, surprisingly, for some, is also moving forward quite actively with regulators, particularly in Mexico and Brazil, who are trying to stimulate fintech innovation startups. But again, it's different. So, for example, in Brazil, where I've spent quite a bit of time, I think the regulator's trying to keep it within the banking community rather than allowing the fintech community to just explode on its own. It needs to be married with the banks. And that's different to the UK and Dubai, for example. Australia has been, in my view, very inhibiting of innovation, but now the Reserve Bank has changed its stance completely. So there's 5 brand new challenger banks, neobanks, starting in Australia. And then I spent time in China and Asia and in India. And the thing about India is that I don't think it's been particularly supportive of foreign fintech innovation within India. But I think with the India stack, it has been very supportive of India innovation domestically. And so, I talk a lot about Paytm, but equally, ICICI Bank and HDFC, Yes Bank, there's a lot of companies here, both newer banks and also startups that I think are doing really interesting things. We just heard a presentation from Zest, for example, and Zest Money, and amazing, that they're doing 5,000 loans a day and processing on average most of those in 1 second through automation. So the RBI is actually not blocking innovation, but it's not the same as UK or Singapore. It's not open to the global masses. It's much more stimulating local masses.
In your presentation, you did cover blockchain, cryptocurrencies a bit, but we didn't really sort of hear the view which, as investors, we'd like to hear. So do you really believe that this is an asset class which will survive? Would you personally want to sort of allocate more money to that, or do you think, like so many other people do, that you can't really see the tangible value, and therefore it's anybody's guess which way the prices will head over the next 2-3 years? Of course, Warren Buffett has famously said that if he had the option, he'd buy a put option on Bitcoin, because he feels that in the long term, it would be value destructive.
Yeah, I mean, there's a lot of negativity around Bitcoin and cryptocurrencies, particularly from regulators and banks and some of the investors like Warren Buffett. I'm not negative at all. I'm actually very positive about cryptocurrencies. I'm just not positive about some of them. So Bitcoin, I think, is pretty flaky. And the reason I say that is that it's not, in its design, it's not capable of doing the structures for global commerce that we need because it's limited in scalability and speed. I think Ethereum, which is almost like a Bitcoin reboot for business, is far more interesting. And a lot of banks are investing, and a lot of corporations and governments are investing in Ethereum-based smart contracts. But again, it's still very early days in that when the DAO hack occurred a couple of years ago, and Ethereum had to reboot, basically doing what they call a hard fork, so they start again. Vitalik Buterin, who is the sort of developer and founder of Ethereum, said, "This is research. This is an experiment, and I'm not going to bet my business on an experiment." So It's still a way away, but when it does start to kick in and work properly in real production services, and there are some that are already out there, and there are many that are being prototyped and developed, it will be transformational. And the reason it's transformational is that we currently have so many ledgers within the financial community that are managed by humans, and it's a big overhead and it's not efficient. And so we move from physical ledgers of debits and credits in branches to mainframe-based ledgers. Now we're trying to get to distributed ledgers. And the big difference of a distributed ledger is that everybody gets a copy of the database, the ledger, and the network manages the updates. So no human has to do reconciliation or exception management. The network manages the whole thing. And because of that, everyone can trust the network to do the ledger. And at that point, you save huge amounts of overhead within the banking system.
So in your presentation, you did mention that one of the biggest risks to digital banking really would be that of getting hacked, cybersecurity related issues. And we've seen that both in cryptocurrencies, we've seen that even with legacy systems such as SWIFT, where I think the Reserve Bank or the Central Bank of Bangladesh lost some humongous amount of money, where again, their old-fashioned SWIFT system got effectively hacked. So how aware do you see the fintech community in actually being proactive about managing these risks and convincing the customers that they've got it covered?
Well, because of Hollywood, most people think that hacking occurs by some person wearing a hoodie in a dark bedroom on a keyboard, and that's not really the case. There are obviously a lot of people out there that do try and break security through the internet, because the money is in financial institutions that's now holding that as data, which if you can get that data and hack into it, then you could be a multi-billionaire. But banks and fintech companies are pretty good at creating strong defensive walls that stop those things happening. And when they are breached, like the Bank of Bangladesh you mentioned, I think a lot of people don't realize how that happens. Do you know how it happened?
So I think it was a human failure ultimately, so somebody didn't...
It's a human failure, and it nearly always is.
Yeah.
And so I often host hackers in my networks presenting how they work. They're not, the people presenting are reformed hackers. They've been out of prison.
Ethical hackers.
Ethical hackers. Some of them have been to prison. They just made a career out of showing how to hack. And my favorite story is from James Woodworth, who is known as the ethical hacker. And so people hire him to say, can you break into our data systems? And his story was working for one of the banks, and it illustrates this human failure really well. He just sat outside the bank for a couple of months, watching people coming to and fro, and noticed that every Friday morning at 11 o'clock, the pizza guy turned up and was waved straight through by security, no questions asked. So one Friday morning, he got a job and was dressed as the pizza guy, walked straight through, no questions asked, got to the 5th floor of the data center in the bank, and had a ultraviolet spray. So the data center is secured by a PIN security system. But he just sprayed the PIN board with the ultraviolet spray, walked away, came back 15 minutes later, held a UV light over the PIN board, and saw what the PIN code was to enter into the data center. At that point, break into the systems, no problem. And all of that is just human trust. And in fact, there's another hacker I've had talking about these things, and he says, the fact that most people think that you won't defraud me makes you vulnerable. And people don't understand the way in which fraudsters and hackers think. So fraudsters and hackers would be quite happy to steal the money off their grandma. You don't think that way. Or if you do, you should be in jail.
Yeah, fascinating. And again, one of the points you mentioned, I think even in this interview, is that you've traveled around the world. You've seen fintech emerging in everywhere from Latin America to Europe to Australia, the Far East. So do you see any particular geographical regions where fintech innovation has happened sort of much faster? So for example, one of the common perceptions is that Scandinavia is probably ahead. India, we always felt we were behind, but now again, we're hopefully leapfrogging to the latest technologies with, as you said, India Stack, and with an ecosystem developing very rapidly, with mobile data connectivity sort of increasing multifold in the last couple of years. So where do you see who would you say is the gold standard in fintech innovation, and where do you see India relative to that? How do you think we in India can catch up?
So I mentioned fintech and techfin. And fintech is what I see happening in Europe and America, which is making traditional financial services cheaper, faster, and better with technology, rather than reimagining financial services with technology. So, and I have a group called Nordic Finance Innovation that's in the Scandinavian region, Nordic region, which, it's innovative, but it's also dealing with an awful lot of legacy infrastructure. Most of the infrastructure in Europe and America was implemented before Mark Zuckerberg was conceived. And as a result, it's very hard to renovate that rapidly, and it's not happening rapidly. And so I then split the world into sort of northern, southern hemisphere and look at Central South America, the African nations, Philippines, Indonesia, China, India, and say all of these nations are actually leapfrogging Europe and America because the infrastructure wasn't there, and it's been implemented in the last 10, 15, 20 years. And because it's being implemented anew, and it's being implemented after the internet was born, nearly all of the technology innovation in finance is occurring, being made on the internet rather than being made before the internet. And it's not doing financial services cheaper, faster, and better with technology, but it's reinventing financial services. And if you want the gold standard, then my company that I always look at is Ant Financial, Alipay, Alibaba in China. And you may say, well, why not Tencent and WeChat Pay? And the reason is that Tencent and WeChat Pay is not global, but Alipay and Ant Financial is global. It's here in India, so Paytm is powered by Alipay and Ant Financial's open banking, open financial services technologies. It is obviously flavored locally. It's Paytm. It's not Chinese, but a lot of what's inside Paytm has come from Ant Financial. And the same is true with GCash in Philippines or Ascent Money in Thailand or EasyPesa in Pakistan. They're all being powered by Ant Financial, Alipay technologies. And they, to me, get this. And just to give a final illustration of how they get it, is that Visa, the credit card brand, processes an average of about 2,000 transactions per second. Alipay, on Singles Day in November 2018, was processing 256,000 transactions a second.
Wow.
And they processed $1 billion in the first 90 seconds of sales. And that scale is just humongous. I don't see that scale anywhere else in the world.
It's just difficult to, it just boggles the mind. It's difficult to imagine. Yeah. So what last words of advice would you have for our viewers, both in terms of managing their careers as well as in terms of staying at the cutting edge of fintech?
Well, I think if you're doing what you've always done, stop it. You start reskilling yourself to be relevant for the future. Bearing in mind that machines can learn anything that's administration, statistics, numbers, dates, start learning creative skills, human skills, and reskilling yourself to be relevant for the future. Bearing in mind that a lot of people will have set, a number of career moves during their life, not just a job for life. And in particular, I would say subscribe to a blog called thefinancer.com, written by Chris Skinner, and read the books, Doing Digital, Value Web, Digital Human, and Digital Bank, written by a guy called Chris Skinner. But the reason why I say that is that in all of my thinking, I would never claim to be always right. I'm often wrong, but the fact is that a lot of what's happening today in banking and finance, I was writing about on the blog 10 years ago. So open banking, I was writing about 10 years ago. A marketplace of financial services, I was writing about 10 years ago. So be aware of what's out there and start to learn new skills, and also keep abreast of what people are thinking who hopefully you feel have something good to say.
Thank you so much, Chris.
Thank you.
It's absolutely fascinating.
And great to be
look
here in
forward
Bangalore,
to
or Bengaluru.
Yeah,
rather.
absolutely. Thanks so much.
The town of boiled beans.
Yes. In fact, most people are not aware of that.
Oh, really? Oh, okay.
Yeah.
Well,
so even in India, you'll find a surprisingly large number of people who are not aware that